For a closer look at JPMorgan's numbers this morning, let's go to a guest who heads up research at Ariel Investments in Chicago and also pays particular attention to the financial sector. Jason Tyler is also on the firm's investment committee helping manage $5 billion. Jason, always nice to see you. And, you know, right before the break, we were talking about these results being pretty much mixed for JPM. And that's why you're kind of not seeing the stock move around too much on it. But I know the question for you these last quarters has always been, you know, is this sustainable for the bank, you know, beating on the bottom line? And in your view, I mean, have we gotten a better picture with these results?
I think we've probably gone the other way. I think that a lot of investors, and the reason why the number looks so great on the beat versus the analyst estimates, but the stock's not going to move much today, is because investors are still trying to figure out where is the revenue going to come from when we stop being able to release reserves. And I think that's not clear yet.
Right. It's not clear, but do you have any suppositions on that, though? Because if it's not going to come from trading revenue, then what is it?
Yeah. Well, eventually we're going to have to see interest rates move in order for all of the banks to do better. And I think even JPMorgan, and don't get me wrong, this is a terrific company, and I think investors sometimes miss the fact that you're not only getting great earnings coming from trading, but you've got a $400 million earnings coming in every quarter from a retail business, and $250 million coming from asset management. This is a great business with a lot of different types of high-quality earnings, but eventually we're going to have some boost in either consumer borrowing, which JPMorgan's great at, or the interest rate environment to boost the commercial business. Right,
has got to get better. But Jason, you know, there's a lot of buys on JPMorgan among the analyst community, yet the stock's done pretty poor. Who's right in this?
Yeah, that's the thing that concerns me most right now, Betty, is the fact that this isn't a real contrarian play. You've got 9.5% Tier 1 common equity. Everybody realizes this is a fortress balance sheet. Everybody's kind of hiding here that wants to buy financials. And so it's the one thing that does concern me.
But isn't it then they're buying Jamie Dimon then? Is that what's going on here?
That's a huge part of it, obviously. And, you know, a lot of people are fans of Jamie, and he's created this balance sheet that everybody knows is pretty much impenetrable. And so where's the contrarian play in it? And I think that's going to have to come from people believing that in the long run, Jamie's not only going to be a great shepherd of having a great balance sheet and avoiding credit losses, but of growing the bank.
Okay, well, speaking about Jamie, Jason, what do you want to hear from him at this 9 o'clock conference call?
Well, I think it's trying to get a sense of where the overall growth in the business is going to come from in the long run, and also what are his concerns from a regulatory perspective. There's so many moving parts right now, Betty, that are coming out of not just Washington, but the rest of the world. And in terms of the strength of the dollar, in terms of Basel, I think he's in great shape there.
And also these mortgage foreclosures too, right?
Absolutely. There's a lot of things that's got to be keeping him up at night that are out of his control. And I want to get a sense of what the things are that he's most worried about right now, so that I know that the analyst community at least is focused on that. Right.
So that they may not be able to sleep at night either, then, knowing what he's worried about, Jason. Okay.
Right.
Thank you. Good to see you as always, Jason Tyler,
Great to see you, Betty.
Ariel Investments.